Three, two, and one. What's going on, everybody? Welcome back to another ETF Tracker show, talking all things going on in the markets. The war continues on. The White House issues statements, and then the next day it's different. And so they've had a recent statement that came out as well. We had Mr. Kevin Warsh, who's going to be the next Fed chair, come out and do a hearing. A bunch of clips circulating that we're going to talk about this week. Stock market's still at all-time highs. That was one thing I saw the White House tweeted, so they're definitely taking big credit for that with the midterms coming up in the future as well. I've got a couple other clips I want to talk about in relation to the economy. We saw Tim Cook, actually CEO of Apple, step down recently, which was pretty interesting. So that was the other headline that kind of caught a lot of people by surprise. No crazy movement from Apple, at least from what I'm seeing. We currently have Bitcoin sitting at $78,000, up 3% in the last day, up 4.5% on the last week. Ethereum at 2,378. If you're in greed, we got 62 into the greed. We've got the SPY up like a little under 1%. The VIX is down 1.5%. From the commodity side, I'm seeing nothing crazy. We got the oils in the $90 region, gold at $4,700. So kind of just rolling through some of the prices all along, and we got some awesome clips here to react to. But we got Thomas, my co-host, as well, to join me today, and we're going to talk about all the things. How's it going?
Yeah, good stuff, man. Doing well. It's been a fun week. Looks like a lot of interesting news. Keen to dig into it with you. Yeah, man. I mean, gee, where do you want to start? I mean, obviously, like, it's nice to see Bitcoin's had a little bit of a run recently. There's a bunch of stuff in the news about that. Obviously, we'll get into that today. But also, this Fed chair stuff is interesting too, which you got on screen here. I want to talk about this as well, just because we all know if you're in macro, if you're in Bitcoin, like what determines macro right now? You've basically got the war, and you've got whatever the Fed's going to do over the next 6 months, and maybe a little bit of AI productivity as well. I'll give you that one. Maybe those are your three pillars there, but that's it, right? So it's an interesting setup, and let's get into it.
Hell yeah, dude. Hell yeah, let's play the clips. So got a few here from Kevin Warsh's hearing. And again, he is our new Fed chair. So we'll play a few clips. We've got a couple of shorter ones here and a couple threads I want to pull. And then we've got one kind of related to a bigger conversation around the Fed as well. So here we got the first two here.
Do you believe that digital assets should be incorporated into our financial industry so Americans have new investment opportunities and consumer protections?
Senator, digital assets are already part of the fabric of our financial services industry in the United States. Yes.
Thanks, Mr. Walsh. Do you believe that digital assets should be incorporated into our financial industry so Americans...
Okay, then there's also one here. I want to play both clips here because I think they can both tie into a larger conversation, but here we got one on the CBDC as well. Oops, one sec. I thought I had the right one.
Issue a currencies. Do you agree that the Federal Reserve has no legal right to issue a central bank digital currency?
Senator, I agree that they don't have the right, and I think it would be a bad policy choice.
Somebody just put an exclamation mark on that. Under your chairmanship of the Federal Reserve, you will not have the Federal Reserve explore or any way move towards a central bank digital currency.
If it's within the power of the chairman of the Federal Reserve, I agree with that statement.
Perfect. That's currencies.
Okay, so we have two clips. The one talking about the CBDC, he says he would not be down for that. He also said here in this clip, digital assets are already part of the fabric of our financial services industry in the U.S. Just knee-jerk reactions there from our upcoming Fed chair.
Look, man, I think that what we're seeing is that the Bitcoin argument has proliferated and is winning, has won potentially already. I mean, you already see that just with the favorable conditions that President Trump has provided for Bitcoin. Trump hasn't come through on massively pumping it through a strategically Bitcoin reserve. However, look at the language that everybody uses. Everybody is embracing it. And the Fed chair, like Kevin is right. It is integrated into the system. We have ETFs now. We have publicly traded companies buying it. There's no stigma about Bitcoin anymore. It's all very clear that digital assets are here, and it's not even really in dispute. You know, you go back 5 years, like it was really, people would talk about, first of all, they're all going to zero. And if they aren't going to zero, we should make them go to zero because it's bad for the climate, it's bad for this, it's bad for all of that noise has just kind of disappeared. Now everybody accepts it's essentially part of the fabric. You know, you have little bits on like you still have a few people creating noise on the side, but you have to remember as well that when there's been kind of money about that comes from fighting something like Bitcoin, even after the war, you still have these people that are sort of notionally employed to talk about it. So it's like there is probably the odd influencer on X or whatever that, and I'm talking about like a Peter Schiff or something, that will still trying to fight Bitcoin, even though the war is already over. And what we're looking at here, it's like, honestly, it's like when you had the Cold War, you know, US, Russia, and you had all these experts on fighting this Cold War, and then the war ended, the wall came down, and then you had all the experts that are like, no, but I'm still an expert in this, and it's like, we don't need you anymore. But you know, they're still kind of sticking around, pretending it's a thing. The point is that you got the Fed chair here saying, yeah, digital assets, yeah, we're doing that. I mean, what do you want me to say? They're already there. Like, that's pretty much his answer. Like, yeah, I mean, no shit, basically. Yeah. And then coming through the other side, which is the CBDC angle, he's saying, no, we're not doing that. I'm not interested. So that's just a huge win for all the people that were making the case for Bitcoin and against CBDCs, and going back certainly over the last, you know, half a dozen years or so. It's a huge win. It's interesting, honestly. What shocks me more, to be honest, is how the price of Bitcoin hasn't married up with the success of Bitcoin from an acceptance and integration perspective, in the sense of it is an institutionalized asset. It is a successful, it has been a de-risked asset. You know, all of these things, I think if you told Bitcoiners 3 years ago, 4 years ago, 5 years ago, they would have said to you, yeah, I know all of this is going to happen. And by the way, Bitcoin is going to be 500K. And so it's interesting the way it's played out, where it's gone tick, 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 tick. Oh, but actually Bitcoin is sitting at, you know, what, 78K or something like thereabouts, when in fact 5 years ago, when a lot of this stuff was in dispute, it had reached 60K in 2021 anyway. So it's really interesting how the price and the integration into the financial system hasn't exactly married up. But it's cool anyway to see you got like Kevin Walsh. He's a supporter, and of course he is, right? Like, by the way, Kevin owns Bitcoin. Of course he does. Like, there's not any, nobody's questioning that. I mean, first of all, it's already public. Like, he's got crypto investments or whatever. But I mean, you don't need to know like you don't need to get out a microscope and go through the line items of his portfolio to figure out he owns Bitcoin. Like, the rich people in America are already positioning themselves for a position in Bitcoin because it makes sense. And everybody knows, like, nobody understands the importance of Bitcoin more than a central banker, right? Like, he gets it. He understands exactly. He understands the big print. He was there on the board when in the global financial crisis, right? He managed it. He approved. He was one of the ones that voted for quantitative easing post GFC. We're talking 2009 era, 2008 era. He supported well, quantitative easing. What is quantitative easing? We're talking about printing money. That's what we're talking about here. And he supported mass money printing before. Now, what's interesting, and is trying to figure out what his position is today. Because I have to say, I mean, this is something we've talked about before as well, where he's a little bit like, oh, I did it back then, but I didn't actually support it on the future. Because bear in mind, it wasn't a one-off print, right? The U.S. has printed money continuously, nonstop for a decade post the global financial crisis. And Kevin's position was, I supported it at the beginning, but then I said, I sort of stopped supporting it. And so now there is still an uncertainty around, like how much, basically how much are they going to print, essentially. There's still a little bit of uncertainty around that because we don't know to the extent to which, he talks about, I want to lower interest rates but to stimulate the economy, but I also want to reduce the assets on the balance sheet and all this stuff. So that's where the uncertainty comes in. But I mean, Kevin knows, like nobody knows more than Kevin that another crisis is coming. And so more printing is going to happen. So of course he's going to be positioned for it. He's going to research Bitcoin. He's an economist. Like, and if anyone should get it, it should be him.
Yeah. No, I think you're largely right. There's a couple threads I wanted to pull. One of them is a clip unrelated to this, but you had mentioned Bitcoin being an institutionalized asset, and there was a clip going in the other direction that actually had brought up, funnily enough. And so I want to get your thoughts on his take as well in a little bit. But a few more clips here from Kevin Warsh into the conversation around like the role of the Fed, how it's going to be. We've seen Trump sort of just make his own rules up. It seems like this past year or so, like all those memes of him and Jerome like walking around and he's like saying, oh, this happened. Jerome's like, wait, that didn't happen. And it's like quite literally our economy is like what they're joking about. I'm like, bro, what's happening right now? So anyways, a few clips here. One of them, Kevin Warsh talking about future looking interest rate decisions and how he thinks about that looking forward, if he thinks it's good to have those insights, as well as this one here. I'm talking about his relationship to the president when they're talking about rates, if they have a role together to play, or this is something that remains in the power of the Fed. Just talking about how it's going to be run, essentially. And so a couple of interesting stuff here. I'll start with this one.
Can you tell us a little bit about your conversations with President Trump about interest rates?
Yeah. I don't want to put words in the president's mouth, but I think he has said loudly and clearly his view on interest rates. Don't think I'm breaking any news here. But I can tell you what I said, and what I said the president is what I've said to this committee and what I've frankly been writing about for more than a decade. Interest rates are the much better way to be using monetary policy than buying bonds and mortgages, some of which are issued from the United States Treasury Department. That is a confusion of roles. That leads to a set of mission creep. So interest rates are the dominant tool, and interest rates, as I mentioned, get in the cracks. My broad view on the conduct of policy from here is that too many Fed officials, past and present, opine in advance about where they think interest rates should be next meeting, next quarter, next year. I think that's quite unhelpful. As we've heard today from many of your colleagues, we don't know the state of AI. We can't be certain about the state of geopolitics. The economy is going to change.
So a little bit into how I only played a little bit of that clip, and then I want to get a few seconds from this one here as well.
Professor, what's a sock puppet?
I heard the reference from Senator Warren.
Yeah, what
earlier.
is it?
I'm not sure I know. I think
Okay.
it's that thing you stick your hand in.
Yeah, kind of like this.
Yes.
What's a human sock puppet? Isn't a human sock puppet somebody will do what somebody say the last part?
No, not for most of them. Sir.
Okay, so it takes a fair.
I will.
Okay, can we agree? Can we agree that politicians have the right to offer you advice about what to do with interest rates?
Senator, we can.
All right, I can't remember exactly because this is a 5-minute clip. I just realized I can't remember where in the video it was, but essentially just talking about what the role of the Fed's going to be, and specifically his role as Fed chair. Give us some of your thoughts on just kind of how he's speaking about this.
Yeah, sure. So I'll lay it out and just quickly reiterating the most key point here, which is what he said regarding his been his point of view going back a decade. And he said this repeatedly in interviews. He's written about this, and this is well before any talk of him actually becoming a Fed chairman. But the key point is he thinks that he wants the Fed to use lower interest rates to stimulate the economy, but on the short-term rates. Like, that's the overnight rate that you see that the Fed offers the banks, which in turn means what a bank will offer you. It's like, what is the rate in your bank account, essentially? Your bank account rate, or the bank account rate that the banks get at the Fed. What he doesn't want to do, which is quantitative easing, which is what the Fed has done, which is buying of longer duration bonds. That's what happens when, say, for example, the federal government issues a 30-year bond to fund their, whatever bill spending they're doing, right? Like, or fund the military or whatever. I mean, the federal government has a multi-trillion-dollar deficit, and they fund that deficit by borrowing money. And what the Fed, and what he argues, is that all of the waters have been muddied because the Federal Reserve has been operating and doing two different things simultaneously. On one level, it's setting the overnight cash rate, it's setting the short-term interest rates of the economy. But what else it's been doing is it's been buying these bonds. And of course, how does it buy these bonds? It prints money to buy these bonds. So that's important for the context of the overall economy. But equally, what's important is he talks about the way it distorts everything. He actually has this grand theory. He has this grand theory that says the reason why the federal government is operating at such a massive deficit, and for the people that are still, if you're not, to be fair, we've got probably 1,000 people watching right now. If you're not fully across what all that means, the government is spending more money than it's taking in each year by about $2 trillion. And so how does the government fund that $2 trillion gap? It borrows money to do that. And one of the ways it can borrow money to do that is the Federal Reserve gives it money. And where does the Federal Reserve get that money? They print the money. And he says what happens is Congress, they're the people that decide the budget. They're the people that decide how much is being spent by the federal government. They can see the Federal Reserve buying these bonds, and they know, it has this feedback effect where they go, we can have a massive deficit because we know we'll be backstopped by the Federal Reserve. So it creates this incentive problem where he basically says the reason why the government is operating and racking up and loading up debt, getting this essentially massive debt piles, is because it knows the Federal Reserve is going to bail them out. So what he's suggesting is stop bailing them out, make it crystal clear you're not going to bail them out. That will help them be forced to come to, essentially they'll have a kind of a time to grow up moment where they have to get a bit more serious about actually not having these massive deficits. And he believes that you can actually right a lot of the problems with the way the government is operating by fixing the way the Federal Reserve operates, because you stick to the one original mandate, which is we're going to set the short-term interest rates in the economy, and we're going to do it based on, to his other points, we're going to do it based on the unemployment rate, the inflation rate, and all of these things. And that's why he's also very smartly and astutely saying, I can't tell you what the interest rate is going to be. He has a bias towards lowering interest rates. As a preference, all things being equal, he'd like to see lower rates. Okay, fine. However, the reality is that you can't just you need to set rates appropriate for the way the economy is operating. So, for example, when we have massive spikes in inflation, perhaps because for all kind of range of reasons, maybe it's government spending, but it also could be like commodity prices changing and energy prices changing, or it could be related to the deflationary effects of technology being there or not being there, depending on the productivity of the economy. But the point is that you have an inflation rate, and you need to set your interest rates at an appropriate level to handle that inflation rate. So he can't say, well, interest rates are going to be this by Christmas. They just can't do that. It would be inappropriate to do that because you don't know the way. Like, he doesn't know what's going to happen in this Iran war, for example, right? So he can say, I've got my preferences and I've got my biases, and in a perfect world, I'd like to head in this direction. But fundamentally, the future is unpredictable, and he has to be willing to operate basically, when the facts change your opinion, essentially. Now, what's interesting is some of the other senators in there, when they're talking about like the sock puppets, right, in that other clip, he's talking about sock puppets because the insinuation there is like, Kevin, are you just a sock puppet for President Trump?
Yeah, exactly.
And Trump has made it clear. Trump is going, lower the interest rates. Well, the problem is, by the way, and I don't want to get into the weeds on this, Kate. I don't want to, because I don't want to bore the people. But it's important. It's important to just define this little point here, because it's so important people understand this. The short-term interest rates will affect the long-term interest rates. Yes, we're gonna pump it up. Right? But
sorry, I just thought of that when you were talking.
Go for it, man. Go for it. But
no.
The short-term interest rates will affect the long-term interest rates, and the reason is because if Trump wants to bring down the short-term interest rates, and that induces a whole bunch more spending, right? Because it's like, oh, hey, I can borrow money essentially for free now. I'm going to take that money, I'm going to spend it in the economy. Inflation's going to kick up. What happens is that people go, well, now you want me to lend you money? Well, if you want me to lend you money, I'll do it, but I need a higher interest rate. If you want me to give you money for 20 years, fine, but I'm not doing it at this low interest rate. I'm doing it at a higher rate because I know inflation's going to be higher. So there's this opposite effect where when you lower the short-term rates, it can actually kick up it can raise what's called the long end of the bonds. Basically, short-term rates are here, but now on a 20-year basis or 30-year basis, I'm going to need, as a lender, I'm going to need a higher rate in order to lend you the money. That's what the market is doing, right? And so Kevin Warsh may want to lower rates. And by the way, if the Fed wants to lower the long-term bond rate, I'm talking 20-year bond rates, 30-year bond rates, it only has one mechanism, which is quantitative easing, which is the Fed can buy the bonds, because this gets back to Finance 101. There's an inverse relationship between price and yield. And what happens is that if they start buying the bonds, of course, imagine infinite money printing coming to buy anything. What happens? Price goes up. If price goes up, yield goes down. So the only way the Fed can lower long-term interest rates is by buying the bonds and putting them on their balance sheet. But he doesn't want to do that. He doesn't want to do that because it creates all these other problems in the economy. So this is the dilemma he's in. And it's going to be, by the way, to your point, you just brought up the Trump, it's going to be the most impossible situation.
I know.
Because he's going to be there's going to be so many situations that he knows what the right thing to do is, but he's also going to be got Trump on the other end going, we're going to pump this.
Yeah, I know. I think these are good questions they asked as well, like putting them on the spot, be like, what is your relationship to the, how is this going to be played kind of thing? And the way he talks, it sounds like he got as good of a guy as we can get into there, but we'll see what he ends up being able to do. One other scene that a lot of people were excited about, I saw you sent me this video here as well. Was it this guy talking about Bitcoin? He said, and I quote, Bitcoin shows incredible potential. And he brings up proof of work protocols. He talks about peer-to-peer trust for transferring money. Obviously, all that stuff that went down in Iran was a huge deal. I think if Bitcoin's market cap was way higher, that would have been a way bigger deal. Unfortunately, because it's so small still, like people just can't imagine holding too much of their money in an asset that can move up and down. But honestly, with all the assets doing what they're doing with oil and gold and silver and all these big boys moving 5% on the day, it's like, okay, it might be the new norm that 5-10% moves in big assets that you trust just become normalized. I'm not sure what to expect. Like we saw, what's this called? Polymarket is out there doing, you can now do, I believe, futures or options or derivatives, something like that. I saw that not only them, God, who was the other company? It was Charles Schwab, I think, now allows, let me see. I just posted about this earlier today. Why is it blanking on me? It was, give me one second. I just saw this clip. I believe it was Charles Schwab is now doing, where's the clip? Hold on, I'm just scrolling here on the Wolf timeline. I swear I posted about this today. I may have skipped over it. I'll see if I can find it here in a second. But in the meantime, I do want to play this clip here and get your reaction to it. I think we've got it here.
To another subject, our competition with China isn't just about military strength. It also includes monetary strength as well. You know, last year, the Chinese Communist Party's main monetary think tank published research on Bitcoin as a strategic asset. You know, this came after President Trump moved to establish a strategic Bitcoin reserve. Admiral, how does leadership in Bitcoin impact leverage resilience, deterrence for Indo-PACOM against China? And do you think that a strategic Bitcoin reserve helps America compete against China?
Senator, our research into Bitcoin is as a computer science tool. It's the combination of cryptography, a blockchain, and a proof of work. And Bitcoin shows incredible potential as a computer science tool that through the proof of work protocols it actually imposes more cost than just the algorithmic securing of networks and our ability to operate. And Bitcoin is a reality. It is a valuable computer science tool as a power projection. And outside of the economic formulation of it, it has got really important computer science applications for cybersecurity.
Thank you. What recommendations do you have for us here in Congress on how the U.S. can lead on Bitcoin competition?
I'd have to go deeper on that with you for the record, and I can go deeper on that case. But Bitcoin is a reality. It is a peer-to-peer, zero trust transfer of value. Anything that supports all instruments of national power for the United States of America is to the good.
Yeah, really interesting stuff. I also found the clip. It was Charles Schwab saying at some point we will most likely have prediction markets. That was the other clip I was going to pull up here. But anyways, back to what this guy was saying. Didn't know if you had any knee-jerk reactions to his comments here.
Well, I mean, I certainly do. I mean, first of all, shout out to Jason Lowery, who must be out there just celebrating this. I mean, if you're not familiar, for those who are not familiar, he's a guy on Bitcoin Twitter, I guess about 5 years ago, but he was basically pushing this narrative here that Bitcoin is a kind of a power projection tool in the context of geopolitics. And it was an unusual narrative at the time in the sense of it's not really one that's not an obvious one. It's not an intuitive one relative to, so, there's a lot of like intuitive, I guess, ways you can look at Bitcoin, but the kind of geopolitical power projection framework was an unusual one at the time. And he wrote a book on the subject, and it's amazing to see that, you have literally like admirals in the US military that are actually essentially spouting the lines and the framing that he uses to provide for it. And it's an important one because if you frame it as a competition amongst nations for power protection, then it becomes very important. And when it becomes very important, you have to control you have to, you don't want to be left without at least having some ownership of the network. It's very interesting. It's precisely because nobody can control the network, which is what enables it to be this useful defense. And I would say where it is, it's not an act of aggression, it's an act of defense. If you can
Another subject.
when you own a piece of the Bitcoin network, you are just fundamentally protected from actually, like, you have a piece of the network that is protected through time and also cannot be attacked in way other infrastructure, your assets can be attacked. I mean, think about the assets of Iran, to make this like really clear for like logical. When you have all of your real world, when you have physical real world assets, they are easily attacked by, I mean, a US could, if it decides, go and destroy this real world infrastructure trivially. But this digital value that cannot be, that's protected by all of the proof of work and the energy that's been put into Bitcoin over the last 20 years, it's like a cumulative energy that makes it harder and harder to change. It can't be changed, essentially. You are essentially storing your value in a network that cannot be messed with by anybody else, including a nation state. And that's important because there's not many things you can say that about. Like, not, you know, it doesn't sound all that profound, but when you start to really dig at it, you go, actually, pretty much everything in this world is vulnerable to attack to some extent. But Bitcoin has this theoretical advantage that makes it very unique. Now, some people are going to argue about this, of course, right? Like, you want to talk about quantum attacks and this sort of thing, and that's where it gets, that's probably the counter to, if you can drain the value because you can do a quantum attack on Bitcoin, maybe it's not the kind of power projection tool that's being presented here.
Yeah.
However, that is why, I mean, honestly, that's why Bitcoin is, if Bitcoin was completely de-risked and there was nothing out there, that there's no even conceivable risk, Bitcoin would be in the millions per coin, right? So that's part of the thing, right? You have a network that's still only, 16 years old or something like that, and isn't fully matured, fully developed. And that's why it's a combination of things. Like, that's what's interesting about this, is that it's still interesting from a investor perspective, but it's also interesting from a computer science or a military perspective. You have all these different people that come at it from different angles. And the last thing I'll just say on this point is, you notice that people always seem to find, when they find Bitcoin, they always think about it in the framing of their own mind. Like, when you're a military guy, you see Bitcoin as a military tool. And when you're when you're an economist, you see it as an economic tool. And when you're a philanthropist, you see it as a philanthropic tool. And when you're a venture capitalist, you see it as this, computer science, cryptography tool. And, everybody, like, it's like, whatever you are, that's what you kind of put onto the thing, which is interesting because, of course, that in itself reminds you of, like, what is the internet? The internet is a million different things all at once. It's not, and it's like who you are and what you bring to the internet determines what it is to you. And that's actually very similar to Bitcoin, which I think is interesting just because there's not too many things you would actually say that about.
Yeah. I mean, I pretty much agree with everything you just said there. It's also cool seeing, it's pretty crazy seeing Bitcoin talked about at this level. And seeing, I mean, not to call this guy old or anything like that, but to get the older crowd to look past, Bitcoin on the headlines that you see on television. I mean, we even got the big boy old bankers like Jamie Dimon are on board. Like, they're seeing Bitcoin. They understand what it is at this point. They may have understood it for a while, but they're now publicly coming out and saying.
but you know what, Kate? I have to challenge you there because I actually think on this one front, everything has changed in that regard, in the sense of I don't think the adoption is coming from, it's not like Gen Z are figuring out Bitcoin. It's actually boomers that are figuring out Bitcoin. The first generation to really get Bitcoin and the early adopters, when you look at this demographically, Gen X, Gen Y, yes, but it wasn't the boomers, not really. However, if you want to look at all of the adoption that's happened in the last 5 years, it's been people like this man who clearly gets it. But it's a complex topic, to understand, even to just understand and explain what is proof of what, like the Gen Z don't get it. They don't get it.
Yeah.
And it's a complex topic, and it actually requires a lot of education, right? It's not the trouble with Bitcoin is that it's complex, and you can't expect 18, 19-year-olds to get it. They like the sound, they might like Gen Z, and I'm stereotyping, right? But if you look at the young people today, they're not the ones that are going to, or let me put it like this. They're not the ones posting about Bitcoin on X. Like they're not, and I see it in even like the demographic profile of my my X account, because like you can get the analytics and this sort of thing. I get much more people in their 50s and 60s, much higher proportion of them than like 15-year-olds, right? They don't care about 20-year-olds. Don't care about.
True.
And I mean, part of that as well, of course, is you only get interested when you have an incentive to get interested, for the most part. And the issue with Bitcoin fundamentally is, what does pretty much every 18-year-old have in common with each other? They have no money, right? Like it's probably the most common thing about all young people, and it's just the nature, like the life cycle of life. They've got no wealth, and so they don't have the incentive to really research it, because it's only you get the incentive, and then you kind of learn and you dig in, and of course I'm speaking in generic terms. Obviously, plenty of everybody can throw up their examples, or no, look, show me this 17-year-old or whatever, and that's fine too. I'm not arguing. I'm just saying, as across the generationally thing, I think what's interesting about Bitcoin is it has this perception that it's like a really young person's thing, and yet, from what I see, actually, I'd say, the most of the adoption recently has been the boomers. And by the way, BlackRock's Bitcoin ETF is at an all-time high in Bitcoin holdings. So Bitcoin is still in a bear market, no question about it, right? We're trading at mid-70s, whatever it is. It's still 35% below its price all-time high. I'll tell you what, it wasn't the boomers that owned the BlackRock ETF. They didn't sell. They own more Bitcoin now than they did at the start of the year, right? Like BlackRock is buying. Institutional money is buying. It's what Bitcoin doesn't have, and we talked about this before as well. What Bitcoin doesn't have probably is just the coolness factor that attracts maybe the youth, and that's partly because the most exciting technology in the world today, and I love Bitcoin, but the most exciting technology is AI, right? Like it just is. I don't, and like
agreed.
So how, that's just the reality of the situation. But it is really interesting how we are seeing this kind of adoption amongst the older generation. And it also, by the way, because they're the ones that have this kind of more uncertainty, where they're going, I'm hitting 65 and I'm looking at retiring. I really need to think hard about what I do with my wealth, what I do with my money, how do I prepare for the next 30 years when maybe I'm not even going to be working. So the boomers are the ones that have the incentive. Whereas when you're 25, you're like, yes, you're thinking about investing, but you're also like, the best strategy is improving your own personal human capital, right? The best thing for all the young guys out there or girls listening, like it's about improving your skill stack. It's about improving your own human capital. Yes, you want to, like, one of the skills that's really important in life is learning how to invest your money. Like, it's an important skill. However, it's not going to get you that far if you don't have the other skills to actually generate the money. Like, you need to have both. You really need to have both. Yeah, and look, I guess maybe I'll pause there because I know we've got like a bunch more to go to. But yeah, that's just my.
You said something there that was actually perfect for this. So you're talking about the BlackRock ETFs, which, by the way, I believe Saylor and MSCR may have just passed, or they're right at the same exact level or around there of IBIT, which is interesting. And so you got two massive stackers. Yeah, and these guys, dude, these boys like Tom Lee's, the Sailors of the world, they're buying up. And there's a couple of clips out there. They're very impressed by the sheer numbers they're picking up at these levels. I mean, Saylor, obviously, with his new STRC financial instrument, whatever you want to call it, has brought in a lot of opportunity to buy more Bitcoin than they have. But a lot of buying from the big boys. So if we have Joseph from Milo, he said, everyone says that Bitcoin is an institutional trade, but it is not an institutional trade yet. And so here's kind of his logic here. And I thought it was interesting, so I want to get your thoughts.
You say widely used institutional adoption, and I don't know if that's necessarily true. I think you've got more people that are holding it, but I don't know if institutional like utilizing it, right? Like in terms of, like,
for sure.
Like there's no like.
But if it's a store of,
I can do something with it, right?
Yeah, but if we're looking at it much more akin to gold, which you're not trading gold for pizza or DoorDash or whatever. If we look at it much more, just kind of a thing you hold and it's scarce. So when the government prints,
own it for their own account, right? BlackRock owns it on behalf of their clients, right? So like this is still a retail trade. Everybody says this is an institutional trade. It's not an institutional trade. Institutions are a proxy for retail. And the reason why they're all running into it is because their customers, meaning retails, are saying, listen, I'm going to buy this. Now you're going to buy it for me, or I'm going to buy it with your competitor.
But there are hedge funds. There are large funds like Millennium and. Right?
Yeah, but they're trading, right? They're making markets, right? They're doing things like that, right? Like, it's an allocation. But again, it's that aspect of like saying, okay, like what is like a financial instrument, like the dollar, right? Like the dollar is allowing you to do certain things, right? Like that idea of like currency to be able to like price things in that denomination, right? Like always, like Bitcoin's it's an FX trade, right? It's dollar versus Bitcoin, or Bitcoin versus dollar, right? Like.
Okay, so give me your thoughts on this argument here from Joseph.
Look, I mean, it's so when you look at institutions, he's right, but it's also it's not, institutions represent people. They always do. Fundamentally, that's all we are, right? We're just people and groups of people. That's all it is. It's all it ever will be, unless maybe one day we'll have institutions for AI agents, and that will be a new separate thing. But until that becomes the reality, it's just individual people, i.e. retail, or something representing groups of people. So to his point that, BlackRock's end customer is individual retail, yeah, sure, that's true. But the point is that the individual retail is using that platform to collectively buying up Bitcoin, which is what we see happening. That's why BlackRock, the ETF, now holds over 800,000 Bitcoin. So it's a collective action situation there. I'm not going to argue his point because he's right. At the end of the day, like the individual owners of it are people, retail people. But that's through pension funds and whatever. At the end of the day, they all represent people. At the end of the day, there's an end benefactor. So yeah, I mean, I agree. Also to his point that it's not being used. I mean, yeah, well, as the other person in the stream argued, like holding it is using it. That is the point. It's a store of value point. So yeah, like the buying it, the holding it, that's the using it, And if you don't think that's the use case, then like you must be pretty frustrated with Bitcoin. That's pretty much like that is the main proposition. Everything else is kind of like let me put it like this: where Satoshi what Satoshi's put in the white paper was that it and even mentioned the video clip earlier. Some people think the innovation of Bitcoin is the ability to transfer wealth trustlessly, like move wealth. But that's really only 1% of it. The actual value is to hold wealth trustlessly. It's not the moving it around. Yes, you want to be able to move it, but you might own Bitcoin for 50 years and move it 10 times. You might just want to hold it for the next 50 years. Like it's just about taking it, hold it, pass it through time, store value through time. That's the value proposition. And because it's scarce, and because as he mentioned correctly, fundamentally what you're betting on is it's an FX trade. You have, on one side, you have Bitcoin, and on the other side, you have dollars. And the point is, as you go, well, hang on, Bitcoin is scarce, dollars are not. In the future, there will be more dollars. So therefore, if there's more dollars in the future and same amount of Bitcoin as there is today in the future, therefore, the price of Bitcoin will be higher. Like, it's a very simple trade, and yet it works remarkably well. It works, people can really, I do think on some of this stuff, there's like a left curve, right curve, bell curve thing here where, left curve, so you can left curve this thing with Bitcoin and go, oh yeah, 21 million. Sounds like
yep.
Not many, gonna go up. And then the right curve is you got the Jason Lowry of power projection and proof of work and crypto blocks, blah 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 blah, and
yep.
the genius stuff there, and you end up getting the same answer, which is you love Bitcoin. And then there's the mid curving it, which is they're going, oh, but well, how is it being used? And really, it's not real. Really, it's actually retail adoption and not it's kind of a mid curve take, I think.
I hear you. Yeah, I hear you. So wait, all right, let me see if I can find this. You got me thinking. It may take me a second to find this other clip, but no, that I think it's a well taken point there. One thing I want to get your thoughts on here was this clip here. This is Robinhood's CEO, Vlad Tenev, and he's talking about just how I always think his clips are interesting because him and Brian Armstrong both have the inside look at retail. And I know they cater to the institutions here as well, but they bring a pretty interesting opinion just on the market in general. It's just interesting because so many of the youth use Robinhood. It's like a lot of people's go-to first app. There's like Robinhood, there's Coinbase, there's Webull, and a few others that people use. But here's Vlad Tenev talking about how the market has changed in terms of his customers just from a few years ago to today.
This is, by the way, a new thing. It used to be that when I'm on the phone with our best customers, it was someone that had maybe a couple $100K or maybe $1 million in their accounts. Then it went to talking to customers that have tens of millions. And nowadays, I'm routinely talking to customers that are looking to move hundreds of millions and have that in Robinhood. And so, for a high net worth individual, there's just tons of things that we have to do. This is
interesting.
So yeah, thoughts on that? I mean, people are making more money, I guess.
Yeah. I mean, look, they're establishing themselves. I mean, they've dominated, right? When you look at the way Robinhood is what Coinbase wishes it was, and which is why now Coinbase is trying to. I don't know if you've seen this, but Coinbase is like pivoting to offering stocks and this sort of thing. But
and they offer it all now.
Robinhood has just smashed that market of, they get the degen gamblers, but they also have used the money they're generating from the degen gamblers to generate fantastic, they use that capital and reinvest it in just a great UI, great UX experience when they're using the app. So, as a business, they've crushed it. And to your point, how they're like a bellwether for the total market, it's really interesting because when you see Robinhood customers losing money, it's like, oh, that's what's happening to retail in the space right now. And conversely, when Robinhood customers are making money, it's like, yeah, things are frothy, things are hot, things are going. And so it is really like seeing that, going in and looking at like their quarterly reports, it's fascinating stuff. It really is. It tells you a lot about what's happening in the market at a given moment. Yeah, super interesting.
Yeah, I think it's fascinating, and a lot of these guys have pivoted to offer prediction markets. We saw Charles Schwab is going to be having those involved. Obviously, Coinbase has got it, and so I don't know. I think it's going to keep getting younger and younger. A lot of people just seem interested. There's a lot of people. I mean, obviously, I think the rise of Andrew Tate the last couple of years shows that the youth, definitely with all the social media, being able to compare yourself to these people on social media, more and more, just kind of ingrained in the nature of like these kids on middle school. They all want to be YouTubers now. So it's a different landscape, I think. And so interesting there across the board. One thing also that comes up is the AI discussion. There's a couple clips here. Just on the economy overall. One of them here is from Kathy Wood, ARK Invest CEO, always interesting character to bring up. And we also have, this is a bit of an older clip, but still I think worth bringing up every now and then, which is Federal Jerome Powell, outlining one of the main problems we've had for a while, virtually zero net job creation in the private sector. I think there's a few different problems just across the board in the economy. But I think the AI one scares a good chunk of people, just like in normal conversation. A lot of people seem to be nervous about this. AI is taking over the jobs. We've seen people like Elon, and I've talked about this a bunch of times, but Elon Musk talking about a high income UBI or something like that, where he's saying like people will be getting a healthy amount of money every single month. But he says it's so like, yeah, he's like, life's going to be good. And I'm like, dude, I don't know if I believe that. That sounds interesting. It sounds a little bit too good to be true.
Look, yeah, I mean, let's talk about that for a moment, because I really, every time humanity faces a big problem, it seems to be that we coalesce around the argument that, do you know what we have to do? We have to print a lot of money. Like, it's like, no matter what the situation is, it's like, oh,
print more money.
Global warming, climate change.
Yeah.
You know what the solution for that is? How we're going to fix that? We're going to print money. Or what? We got AI, and AI. This technology is really good. So we're going to print money. And it's really unfortunate. Also, it's two things, right? You go print money, or the other people just go, we just want full-blown communism. I mean, that's the other response to it.
Well, he said that the money would be generated from just how productive the AI is. I just feel like, I don't know. That's like a big blanket statement,
Dude, Elon said how about Elon focus on going to Mars, all right? Like, Elon says we're going to Mars. Oh, how about Elon says we're going to have driverless cars by 2020? I mean, don't get me wrong. I love Elon. Like, he's a great thinker, and part of his magic is that he loves sci-fi, and he believes in sci-fi, and he thinks it can be real, and he wants to bring it to the world. But you can't, like, this idea that we're going to have these amazing computers, we're going to have super high income for everybody. It's fanciful for the really, like, the problem is that compared to what? Because you could argue the poor people today are already extremely rich if you compare them to what life was like 500 years ago. Like, they already are extremely rich.
Right.
And so you can say in the future, the poor people in the future will be extremely rich, but they're still going to feel poor, right? You might be quote unquote rich relative to some imaginary point in time, but you're still going to feel poor in the future. And that's because society is predicated on all kinds of, the wants and needs of human beings are predicated on status and hierarchy and all of these things that you cannot get around, right? You can't print your way out of this, and you can't, by the way, you might be able to provide, universal basic food, but you can't provide universal basic love. Like, you can't provide a girlfriend for every guy and a boyfriend for every girl and all this kind of, like, you can't do that based on your money printing ideas about a really productive AI, and you can't provide life satisfaction to all these people. You can't do these basic things, and that's what's going to determine how people feel, whether they feel wealthy or not. Yes, you know, this idea that you can provide a high income. Well, what does that mean? It's like I said before, everybody has a high income relative to the peasant living 1,000 years ago. But today we'll talk about them and we'll say, well, they're dirt poor. And you know what? They are dirt poor. Like, I don't think it's wrong to talk about a poor person today and be like, wow, you know, I see you've got an iPhone, so you're actually really rich. It's like, well, no, if they're, so I just think that Elon sometimes gets off in these kind of fanciful, he spurgs out essentially. I mean, good for him. It's kind of his superpower as well. But, you know, Elon said a year ago he was going to fix the government deficit. So
Yeah,
well,
that is true.
I'm going to fix the government deficit. I'm going to get rid of all government deficit to actually the government should be providing. Actually, the government should be providing universal high
Oh
income.
boy.
I mean,
Yeah.
what, Elon? What? Like, is anyone else? And by the way, am I the first person to bring that up? Like, is anyone going to talk about that? He's gone from we're going to fix government deficit to we're going to provide universal high income for everybody because the government is going to provide it. Like, this is
Interesting.
absurd. It's so like, damn you, Elon. Wake up.
That's actually, I had never really thought about it like that. That's funny. You might be one of the first to call him out on that.
Yeah.
That's funny. That's actually really funny. One other story here. Actually, before I go to this story, I do want to say a big shout out to everyone who's stopping through the stream. If you haven't already, please definitely take a second and follow Thomas. He's right above our faces, and repost the stream if you guys are enjoying it. I do want to give a big shout out as well to RexShares for sponsoring today's show. They've got a bunch of ETFs that are definitely worth trading if you are active in these markets. Obviously, the market's had a pretty good last few days. MSTR being one of those guys doing very well. And so if you guys were trading and you caught the MSTU move, which is 2x long MSTR, you would have done very well this past month. You're up like 60%. And this is just one of the ETFs that they've got. There's a bunch of like 2x leveraged ones that I think are pretty interesting. If you're good at trading, you can do pretty well. I mean, MSTU is literally up 20% on the day, which means MSTR did about 10% or so. And so if you're trading, look, there's a ton of opportunities out there. We know everyone here is not a trader. So definitely be sure you always, and by the way, if you guys want to find out some of those, there's a tweet below the stream. You guys can find out more and check out these ETFs. But if you are an investor or trader, definitely carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contains this and other info about RexShares. If you want to obtain their prospectus and summary prospectus, just visit their websites at rexshares.com. Definitely read carefully before you do any investing. Obviously, we're super stoked to be working with RexShares, one of our longest running clients. But yeah, in the Bitcoin world, there's definitely a bunch of opportunities here.
I mean, that's wild, right? Like, so think about that. Bitcoin is up 3% on the day, and then this 2x leverage MSTR is now up 18%. So it shows you, because what's happening here, I mean, that is like, I mean, that's like riding the tiger. If you're gonna go for like these 2x long vehicles, like it, you know, I mean, I really applaud all the traders out there that nailed this one. If that's you, because the moves will be violent up and down. I mean, so like this vehicle, like MSTU, I think it did a 5x in 3 weeks in the hottest run of 2024. Like, it can run hard. Yeah. I mean, it can run hard, but equally, like, obviously, look what happened after too, right?
Yep.
So
definitely a trade. Not a long-term hold.
It's a trade, and it's, you know, MSTR, right? So we know it's got its STRC. They are leveraging up their Bitcoin. MSTR is, and then now this is leverage. So leverage squared, like leverage. This is like, you know, swinging for home runs. It can work. It can certainly strike out. But it's
100%.
It's you know, this gets back to. But by the way, like T-Rex, you know, this you're gonna like Rex is gonna offer this stuff because there is such demand for. It's like if you want to get into you know, there are certain people that want to spend money betting on a basketball game, and other people want to spend money betting on a different type of market. Like, and it's like it has a similar quality to it in the sense of high volatility. It is, you know, like it can obviously go either way, but
Yeah.
good luck to the traders.
Yeah, 100%. Yeah, 100%. For the traders out there, definitely opportunities for you. But for sure, be careful with that one. If you're not trading, then it's probably not the move for you. But there is a ton of those kind of opportunities just surrounding you. You know, one last thing I wanted to throw in here. I know we're coming up on the hour, but I want to get your quick thoughts if you had any. But longtime CEO of Apple, he has stepped down from the CEO role. He will be becoming the chairman. But we've got a John Ternus who will be replacing him as the new CEO of Apple. Not a ton of crazy action, by the way, on Apple, I saw. And so like their price remains relatively chill, up like 3% in the last week. But yeah,
So-
I mean, Apple, new CEO. Interesting.
It is interesting. And so the one thing that Tim Cook's done is amazingly well at building it into this powerhouse business. But also, you could say, you know, what made people fall in love with Apple originally was the cool new tech. Like Steve Jobs, people don't revere Steve Jobs for how much money Steve made. They revere him because he brought the world the iPhone, brought the world the iPod, brought the world the Mac, like did actually like really cool stuff. You know, like Evan brings up, look at all this stuff that is built, but you know, honestly, like the coolest thing that Apple have done in the last decade is the AirPods, which is cool, but I'm hoping that John will come along, and this is just not me with my investor hat on. This is me with, you know, as an investor, you have to have loved Tim Cook. As an investor, you know, A+ for Tim Cook. But as a person, a human being, you know, that wants to see just the advancement of humanity, I'd love to see the most creative company in the world historically come up with some new cool stuff here. I mean, look, and even talk about the, you know, they're not in the game when it comes to AI, right? Like, I think that probably summarizes Apple's trajectory over the last 15 years. Like, do you really believe if Steve Jobs was around that AI wouldn't be, like, Apple wouldn't be a key player in AI? Of course they would be. Like, it's very interesting to me the way they've become kind of a, you know, safer, boring, oh, you know what we'll do? We'll bring out another iPhone with like a slightly better camera and we'll make $1 bazillion off it. Like, don't get me wrong, they'll make a, you know, just make an absolute mint out of it. But it's not really exciting. I'm hoping that with this transition, we get back to some more exciting stuff. I just think it would be cool to see.
Yeah, I'm kind of with you there. AirPods definitely the best that I remember so far. But big respects, big ups to Tim Cook for leading the charge for so long now. And he'll still be in the fold, but as chairman, not as chief executive officer anymore. And so we'll see. Apple's definitely been a top stock that people are watching in these days, especially with tech having so much of the mental market cap, I guess, of people as they invest. And they were famously not super gung-ho on the AI side of things. So some people were worried about that. Some people were excited about that. So we'll see what John, you know, we'll see what direction he ends up taking this thing. I'm pretty interested to see it and to follow along. So, I mean, that's pretty much it for me. I feel we covered most of the stuff going on in the Bitcoin world, as well as just the broader economy. Was there anything else that kind of caught your eye that you wanted to leave us off with, Thomas?
Look, I mean, I think we covered a lot. Really enjoyed it. I guess the only one story we didn't talk about was like, oh my, wow, MicroStrategy buying $2.5 billion of Bitcoin last week. Like, that is incredible. And honestly, that one move is what I talked about. I posted about this like reflexivity here, right? So you brought up the ETF tracker. You see the way Michael Saylor is loading up to buy, and it's bringing along the ETFs with it. So the BlackRock is coming back in as buying more, and it's got, you know, once you see the buying begets buying, the buying pushes up the price, it starts sucking in more capital, going, ooh, Bitcoin's getting, you know, you posted that on the timeline as well, like Bitcoin's getting the momentum back, like That's what seems to happen. It's the reflexivity here. So that's what I'm watching, and that's really interesting. But yeah, man. Otherwise, another fun week. Lots of interesting stuff going on. I'm looking forward to doing it again with you next week too.
Absolutely, brother. Absolutely. And yeah, for those who enjoyed, I hope you guys learned something today. I always do. Definitely be sure to follow Thomas right above our faces. He does a bunch of great stuff on X, and definitely check out his Wallet Pilot is here as well. And they kind of track all the stuff going on in the Bitcoin ETF world and how those inflows and outflows are doing. And that's in his bio too. It's a great platform, and I encourage you guys to check it out if you guys are staying plugged in. Big shout out to everyone for coming through. We do spaces and streams all the time over on the side for Wolf, as well as here on the ETF Tracker accounts. Definitely be sure to follow along. If you're watching on YouTube, hit the subscribe button. We'll see you guys all the next one. Me and Thomas come on every single week, and we just kind of talk about what's going on in the world out there. So if you guys have any you guys want us to talk about in the next stream, let us know. We'll see you guys all